Hello everybody, this is the Trading Champs and I am Dr. Sasha with you. How are you all doing? Let's have a quick look at Monday. So upcoming week, Monday on 14th February, happy Valentine's Day. We don't have much on USD, which is good. Tuesday, we have USD FOMC member speaking. Well, that's going to be your Monday late night and my Tuesday midnight. And then we have PPI and core PPI, Empire State Manufacturing Index. And what else do we have? We have Wednesday core retail sales, industrial production, and crude oil inventories as well. That's interesting. Thursday, we have Philly Fed Manufacturing Index, unemployment claim, and yeah, that's about it. Friday, we have existing home sales and we have FOMC members speaking. Remember, keep in mind that FOMC member will be speaking late on Thursday as well. In US, intelligence believed that a potential Russian invasion of Ukraine could come as early as next week. So new intelligence revealed on Friday states that Putin has given the supposed green light on an invasion of Ukraine, and US officials fear that move could come before the conclusion of even the Winter Olympics in Beijing. So this thing has created a lot of instability around the world, and people are very concerned. And now with this insecurity, the environment is deteriorating. And the US has continued efforts to reduce the number of its staff in Ukraine and ask them to come back from there. Not only United States, the UK, Japan, Israel, Norway, and South Korea, all of them had urged their citizens to leave Ukraine. And as I was just checking the news just a little while ago, situations looks quite tensed, and I think it says on CNN that Russia has surrounded Ukraine from three sides, all that. So that was the reason for a quick push up on gold because of the uncertainty and because of the possible war between Russia and Ukraine. Let's have a look at the weekly chart on gold. So last week we came really bullish and closed somewhere around 1858 level and came as high as 1865 level. Now, looking at this weekly chart, we were consolidating for a long time between 1835 to 1850 level, roughly, and we have been within this price range for quite some time. If you look at it, lower highs and in this case, making higher lows as well. So we were in the price was absolutely contracting in this area. And as soon as price shot up out of the channel right now and closed above, we are going to look at the scenarios. What is the possibility that we could be looking at for the upcoming week? Before that, let's have a look at the fib level. If we drop the fib from the highest to 2075 area all the way where it dropped out at 1678, 77-ish area, the 50% fib level will be at around 1877 zone. 61% will be around 1923, and 78.6% will be around 1956 area. So these are the important fib level at the top side for the retracement where move could be completed. So one thing is that those people who entered buys in this area could be exiting their prices maybe at around here or here. And we could be tapping these moves in near future. All right, guys, looking at the daily chart, you can see that we have been pushing up once we retrace to 1778 area. Since then, until now, it's a constant push to the top side. We did retrace a little bit in this area, 1807-ish, 1810-ish area, and created some sort of resistance, retested the lows. And since then, it's been 1, 2, 3, 4, 5, and 6 days that we are constantly moving to the top side without making a lower low. So this area has not been retested. Now let's have a look at the 4-hour chart that we have on gold here. So we see that on Monday, when the price started moving to the top side, there was no weekly wick, bottom wick, price, and no daily water week, no 4-hour water week. We just started all the way pushing up in this area and continued the push to the top side. And the same thing happened in 1827 area, no water week, a constant push to the top side. And looking at these higher highs that's forming at the moment, there has been no retracement after the push up that we had from 1792 area until now. No specific retracement. 1877 is the fib level, 50% of 2075 to 1678 push all the way down. That's the highest on the gold, and that's the recent lowest that we found. So this is on your 4-hour chart, and looking at a little bit closely on this chart, let's draw some important levels that we see. One level could be right here. Second area that we could take into consideration is maybe somewhere here, 1810ish area, somewhere here. And then I will be very much interested in considering this as a low, obviously, where we have tapped into many times. Or all the way 80, right here. Okay, so keep these levels in your mind. Now let's have a look. When we have taken a buy in this area, so I had a runner from this area as well as from this area, pop to the top side, but when it started coming down, I secured these two and left only little partials on there and secured 80%, and this position is doing good. I left another runner all the way to the top side. So I had these as well, but I secured and took them out when it was pushing down, expecting some retracement. Yes, I was expecting some sort of retracement on gold before it continues to push to the top side. And this is how my runners look like. If you can look in this area. So my lowest position that's in buy is from 1783, 1789, 94, 22. And I have taken another buy right here on the rejection. So I sold in this area. It pushed down 80 pip on the retracement, on the push to the top side. I entered another buy, and so far it's 70 pips up. So I cannot emphasize enough on the importance of leaving a runner. If you're leaving even a tiny runner, for example, I left my standard runner is at one lot positions when I leave them. That's 25% of my position. And even if I secure that and come down and leave 20% out of that, thinking that it is coming down, why should I be holding this from here to here? So I secured most of my positions in these areas, but left 0.20, 0.20. These positions also giving me 1,453 and $792 when it comes up higher and it starts trending. So when they were here, it was hardly $50, $80, something like that in this area when I left them. But unless and until it comes down and take me out, I leave something on so that I don't have FOMO when the price is going in one direction. And since I was expecting after this push to the downside, further rejection after the retest, so I secured most of my position when it was rejecting in this area, and then thought that it might come back down. So I took these entries out. So I've secured more of these, right? Left only a tiny bit, and it continued pushing to the top side. I have received many messages saying that your account is stuck, or some people have already blown away their accounts and they couldn't manage risk, and they were expecting that, okay, this is it, and it's going to come back, it will start retracing, and late night moves on Friday. So Friday obviously is many times very volatile, and you don't want to give back your profits, all week's profit back on Friday. When I was not consistent and my analysis was not that good, my emotions were not that nice, at that time I used to have these type of difficulties. But I have learned the hard way after losing a lot of money. Thank God I've recovered it all so far. But it's a bad feeling. Your emotions are disturbed. You do not want to blow accounts and then feel the anxiety and give back all your hard work of the whole week. avoid holding big drawdowns, right? So have a stop loss and come out of the trade if it's not in your favor. It can happen with anybody, right? So this is a 1 hour chart right now, and we have been pushing to the top side, and this is the trend line that I see. On Monday, I'm expecting price could be opening up with a gap up on Monday, and when it's not retracing and comes down, I'm going to see to what level it's going to retrace to. Is it going to just respect this area on the left hand side, or is it going to come down a little bit deeper? So this could be one zone, all of that, where we can be expecting some reaction, right? Or it could be all the way to 41, right at the peak. And from anywhere in this area, if I am going to find some sort of buy setup, I'm going to take the continuation move to the top side and then come down to the fib level. That is 50% of the move, the big move that I explained earlier. Or if it comes down to this level again, I'm going to be looking for a buy setup back to the top. One of these two. Now, if, for example, price does not respect these two areas and wants to continue falling down, then I'm going to be looking at this right here, or all the way the support that I discussed earlier at 1820 level, right? So it could be a continuation to these levels as well. All right, and from these levels, you can be again looking for a buy setup in this way. And now this buy setup could be until here, maybe, and rejects. Above 1877 level, if it wants to continue pushing to the top side, then we have many levels at the top, including the 78.6% trip retracement to 1758 and 1924 area as well. It could be really bullish. 1899 is a psychological number as well. And keeping an eye on all these levels, I am going to be very careful while trading. And the main move for the weekly that I am looking at is somewhere maybe from 1777 area back to this. So we could be ranging for the weekly in this area after the push to the top side. Now, it could be very fundamentally driven as well. And you know, we have important news. Keep an eye on the news as well for the next week, guys. Again, as I've mentioned earlier, this is very, very important. We have FOMC member could be speaking on Tuesday, Monday late night, and that can also affect gold. And we also have the ongoing war speculation. We could be having different fluctuations in the market due to war, due to FOMC minutes, or due to other volatile news. And just trade, have small targets. I'm not going to hold very long positions. I'm going to try to secure most of my position as is, or have my stop losses at break even. So next week could be very volatile. Be careful. There could be fluctuations up and down. All right. So all of you take care of yourself. If you have any questions, all the links to reach me, my media links are in the description. And take care. See ya.